Well, let's go and get across a stock picker's view about how to go and play these markets. Of course, the big fallout yesterday from that US CPI report, big flush, and now trying to go and found our poise. Let's bring in Harrison Watt from Shaw and Partners, who's standing by to go and get across all the details. Harrison, welcome back to the show. Great to go and see you there. As the emerging funds manager, the stock there at Shaw and Partners, look, very growth orientated names that you go and focus on often get hit pretty hard when it comes to inflationary pressures and talking about interest rates. What did you see yesterday in that universe?
Yeah, it was definitely a brutal day yesterday, David. Across big and small caps. I think it was very broad-based sell-off. It's important to put this in context, though. We did have a pretty strong rally up into that number. Heading in, we had four pretty strong days on the market, and then obviously yesterday gave all of that back and some. Today we've sort of tried to bounce a little bit on that labour data you mentioned before. I guess what we're seeing is the US inflation data was pretty poor. The Australian data has been a little bit more forgiving, particularly around that inflation expectation print. Came in at 5.4%. It was 5.9% at the last read there as well. So, the Australian market itself, it looks a little bit better positioned in terms of that inflation coming through. And that's actually, probably going to support our smaller cap index as a result. If we see a bit of a push from the Fed and the RBA being a little bit more in control of the inflation, maybe we see this Aussie market continue to outperform the US.
What do you make of sentiment out there amongst the investment community at the moment? Because of course, a couple of years ago, the small cap growth names are absolutely flying by and large. Obviously, it's been quite a return back down to earth. Now that we've seen that big fallout, when you look around the universe, you look at sentiment at the moment, is it the fact that things are still looking so negative a reason to start looking more closely now?
Definitely, I think so. So we've talking to people in the community, in the investment community, there's definitely a very bearish tone out there. But at the same time, we are starting to see some takeover plays coming in. Nitro Software comes to mind, NTO. They've had a play at them, and it might not be the time that everyone's sort of catching a bid again. These, particularly the loss-making tech names, haven't really caught up to speed in this rebound as opposed to the more quality names, I guess. But we are starting to see that interest pick up again. And if you see that corporate interest pick up continuing, then that will flow into more buying broader based as well across the market.
Pushpay is a name that's been associated with a bit M&A activity at the moment. Of course, today though, a bit of speculation that it won't go ahead. Share price being hit pretty hard. What did you make about some of the headlines we've seen and also the Pushpay's response to it, to those media reports?
Yeah, Pushpay, they're down about 9% today. They've basically buried those media reports this morning, saying they've got nothing to update. That's not a great sign when takeover talks are ongoing. Those talks have sort of come to an end. It's BGH and Sixth Street combining there to try and take over Pushpay. I mean, these guys are a really quality business and they've done really well in the last few years. They may not have seen the margin improvement that I guess some people were expecting. They may not have seen the volume growth coming through, but they are, launching new products and they are developing their own pipeline pretty well. I guess they're moving into the Catholic sort of system as well at the moment, and that could provide a bit of a tailwind in growth for these guys. It's definitely an interesting one. If this deal does fall over and that 20% holding from BGH and Sixth Street does come out, that'll put further pressure on the stock. But that's one that I would probably be looking at into further weakness.
Obviously, it's no, it's got pay at the end of its name, so it's probably been drawn up into a lot of the buy now, pay later sector as well. Given it's a very different kind of business model, operating model, what do you make about the underperformance we've seen at the moment of that stock? Because of course that chart just there didn't look very pleasant.
No, it didn't. You take it back 3 years, they had a few downgrades coming through. They do have a massive market that they can tap, particularly in the US. You think about how religious they are in general over in that country. It's a massive TAM that they can get access to. They've also started to do really well in terms of streaming as well. So they're diversifying their business a little bit just away from those collections. Into you think about COVID, everyone you had to be home, you couldn't go to church, you couldn't go to your place of worship, and Pushpay sort of stepped up and tried to provide a sort of another angle into those worshippers from the churches and from religion. So it's a very interesting business in that respect, and they should have pretty reasonable margins. They've actually started to see some of their costs come down as a result of credit card fees and the like. So overall, it is a pretty solid business. Maybe BGH and Sixth Street couldn't come to a number that everyone could agree on, but at the end of the day, they are growing earnings. They do have a really defensible business that they can sort of defend and stave off competition.
Yeah, as you mentioned, down about 9% at this point for the session. I'll tell you, one company that's doing pretty well at the moment, Select Harvest, of course, and predominantly almonds out there at the moment, up with a crop update today. And the market certainly likes it. What were some of the details that it had to go and say?
Right, so Select Harvest has been under a lot of pressure in the last few months. It's back on that varroa mite, of the bees we've had in Australia. That's put a lot of pressure on these guys. You don't often think about almonds and bees together, but bees are needed for pollination of their crops, and they need a certain number of bees to sort of get to the crop number that they had put out there a little while ago. Today they came out and said that they've processed 72% of the 2022 crop, and they've sold that at about a $6.75 per kilo. The last little bit that is to sell will be a little bit lower quality, but still those prices are really strong. And now looking forward into the 2023 crop, they've come out and said that they're looking to do about 30,000 tonnes, which is a little bit light based on where the market was positioned looking back a few months ago before the varroa mite was an issue. But they have come out and said that they're going to get the minimum amount of hives into their crops, and that will support that crop going into 2023. The market was really poorly positioned in this stock. There was about a 5% short sold position. We've probably seen a lot of that covered, or a portion of that covered today as a result of this update. I think people were positioned to see a little bit less than 30,000 tonnes of almonds in 2023 there. The almond market in general is an interesting one as well. California and Spain dominate the supply. We've seen droughts across California for a number of years. Spain's actually had a really hot summer as well, and that's really impacted their crop. So this supply side is an issue in the almond market. Select Harvest isn't a big player in the market. It does have a reasonable footprint, but they should see a tailwind of those prices rising. I would expect to see over $7 a kilo if this drought continues in California and they can't get that crop watered and they can't get those almonds grown as they expected.